Hey guys, welcome back. In today's video, we are talking about the deep value, how Apes were right all along, 10x the current price, and many more in this video. Firstly, we're taking a look at this. When the largest movie theater chain in the world is of lesser value than Cinemark, you know it's DFV. So we'll take a look at the comparison of the price movement and of course the market cap between AMC and Cinemark. You already know that something is going wrong. And we've said this for a very long time in terms of because AMC is ultimately retail owned and Cinemark is institutional owned. And this is one of the biggest reasons for why we're not seeing kind of the similarity in price movements, the similarity in the market cap, because we are both in the industry that are improving, that are doing well, and AMC has actually more to profit off of. And in this case, because we've seen in the past before, when we take a look at the ownership for AMC, now the numbers is different right now, but to me, I still believe that the true ownership is that of 90 to 95% retail, with the rest being insiders and institutions in terms of real shares. And for Cinemark, we've seen in the past before 122% institutional ownership. And so this is by far the biggest reasons for why I think we're not getting fair movement on the price of AMC, on the price of Cinemark. And because of this, we know that AMC is in deep value, because AMC, we've seen, and we covered this yesterday, and we'll talk about it later on as well, the 1.7 billion short, and we're looking at the minimum intrinsic value to be $11 plus, and this is what we are looking at. So the good thing about AMC is that currently everyone knows it's undervalued. Wherever you think it should be $11 or even higher, still $11 is still 10x of where we are, but I believe that it can obviously go higher. But we have to realize is that despite what everyone thinks, there's not a single person who thinks that AMC is overvalued. Everyone believes that AMC is undervalued. And more importantly is that they are willing to bet the fact that it's undervalued. Most cases, when a stock is undervalued, you don't actually see investors buy into it until it actually gets to the point of the valuation people believe it to be. And so that takes a very long time. For AMC, is the complete opposite. Everyone knows undervalued, everyone's willing to buy in at this current rate, and they realize the potential, they realize how much profit will be on the table if they are getting in right now. And this doesn't just apply to the retail, this doesn't just apply to the apes, but of course institutions as well. And it's why I said earlier on, with the numbers we've seen recently, it has shown that over 50% of AMC is now institutional owned. Now, this is obviously a massive change from the past where we've seen 90, 95% retail owned. But ultimately, what it shows is that firstly, institutions are willing to buy. But also secondly, like I've said, the real shares, I believe, are still held by the retail. It's just that with the amount of synthetics that have been flown into the market, with how much opportunity there is for AMC and the fact that these institutions aren't willing to miss out, they have, of course, been buying synthetics. And is why we've seen them to have over 50% ownership of AMC, once again, with the synthetics. And so a big reason for why we're seeing these synthetics being created as well, you can see creating shares out of thin air to dodge borrow fees, while the borrowed ones rack up FTDs. So one of the biggest ways we saw why there were FTDs, why there were synthetics for AMC, was the fact that the short interest was lower than the FTDs. And now that shouldn't be possible because these short shares obviously are the fails to deliver. But if we're seeing more fails to deliver, yet the short interest doesn't match up, then where did these shares come from? And from that, we understand there are, of course, synthetics. Now, what's important is that they're trying to do this right now to stop the borrow fee from going up. We've seen in the past before how high AMC borrow fee has gone. You can see it right now at 1.37, but this is still an increase from previous. So the fact that they have created already billions of shares of AMC to cut down the borrow cost, we are still seeing it go up. Now, it's no drastic amount like we've seen in the past where it goes up 100, 200% in a day, but the very fact that we are seeing it go up, this is still showing how much demand and how much desperation is shown by these short sellers. The fact that they're willing to be buying these amount of shares, the fact that they're willing to create and rehypothecate these amount of synthetic shares, it shows you how many shorts of AMC they truly need. Now, another thing is that like we've said, despite what we're looking at, when you take a look at the overall cost to borrow, it's still going up. It's a very small percentage. It's nothing major like in the past before, but you have to remember, this is on top of the fact that they are already trying to create synthetics to push the cost to borrow down. So they're using a tactic which will normally push the cost to borrow down. But because they've created so many shares and they've borrowed so many shares, that these tactics are still not working to their full capacity, or rather for them, because we are seeing this cost to borrow fee to actually go up still. Now, another big thing for AMC is that AMC Theatres has announced the opening of the first 4DX auditorium in the Kansas City Metro on Monday. So this will be the first theater in the area to have 4DX and the second in the United States, which AMC opened last month. Now, this is very, very important because firstly, there's a reason for why they're doing this. There's a reason why we're focusing on this. Audience continues to seek out premium experiences. Formats like 4DX allows us to expand how films can be enjoyed by guests in our theaters. So you can already see from here why this is needed. Firstly, the overall industry, the overall consensus is that theaters, people who go to theaters, they want a premium experience. 4DX offers exactly that. So this is our first way of not only making sure our existing audiences stay with AMC, but for other audiences as well who may go to these other cinemas to then come to AMC as well. This is the first thing. Now, on top of everything that's going on, we've already talked about what the movies that are coming out: Project Hail Mary, Super Mario, Mandalorian, Toy Story 5. These are all major movies that are coming out, and we'll also have other big movies as well in the future. And so if we are able to expand the amount of people that come to our theaters right now, you can obviously imagine how this will help us with the revenue, how this will help out with the profit, and of course, ultimately, how to help AMC to grow as a company. And on top of this, this is why I believe it's deep value, because when we were in COVID lockdown, zero attendance, doors completely closed, the stock price was still way higher than where we are. So if AMC was able to do that during that time, imagine how well AMC can do now. Imagine the potential there is for AMC right now. And ultimately, when we take a look at some of the competitors like Cinemark, like IMAX, the fact that they are benefiting, the fact that they're going up because the industry is going up, because the industry is getting bigger, that should apply to AMC as well. The only difference is they are not being manipulated as suppressed every single day. You can see AMC pushed out debt, better credit risk, more Dolby screens being built, 4DX rollout, theatrical pivot from production studios, more movies from top production studios. And so these are just some of the things that I'm listing out for what's happening to AMC right now. And so this isn't just me saying that AMC is going to do well. The reason why I say that AMC is going to do well is because of the things that they are achieving and will achieve in the future. The very fact we are already seeing them opening up more premium movies, more theaters, that should already be a good sign. And it won't surprise me if just in a few months' time, we start to see these results, we start to see these posts of how well 4DX has done, about how much more audience is attracted, and more importantly, how much of the new market share it will actually be able to take. Now, with 2 4DX theaters, it's not going to be something major, but the whole point of this is to see how well it can do for us to then scale this up and ultimately be the bigger leader than we already are within the industry. And now we talked about this, about why Apes were right. So one of the reasons we've been talking about there's 1.7 billion shares. For those of you who didn't watch yesterday's video, you can see that this model has actually shown about the AMC short interest, where the synthetic short interest is 300% that of the float, coming in at 1.58 billion, with a total short position at 1.7 billion, 324% of the float. And what we are seeing for in terms of the reported, the quote unquote official short interest is 124 million. So you can see that this big difference between official short interest against the synthetic short interest, and then against the total short position. Now, even then, I think that is still higher, because What is used here is FTDs and some other datas, but it's not talking about some of the offshore datas that could be mentioned. It's not talking about the tokens that have been created. It's not talking about the swaps that have been used. And so I think these are also playing major parts as well that needs to be considered. But even then, 1.7 billion is already a huge amount. And one of the reasons I want to talk about it quickly is taking a look at the VWAP. Now, the reason why VWAP is important is because it essentially is showing it determines the dilution price. It determines when the company is offering their share at what price it's selling at. And so one of the ways to see the manipulation that's going on, to talk about how market makers are trying to prevent AMC from raising money, it is, of course, taking a look at how they're manipulating the VWAP. So that's a quick mention, and anyone can go take a look at that. One of the things we're constantly seeing is how people say AMC keeps dipping, short winning, apes are fucked. But then why does the stock price rise when selling is elevated from the dark pools into lit market? And this is something we've always shown. When AMC had this particular rise up, when we saw 13% to 5%, this was when AMC only saw 60% dark pool. Now 60% is still extremely high, but it shows how even at 60%, AMC is able to go up 13%. And right after AMC had this whole 18-20% move, the dark pool then went to 70 to 80, even 90%, and we saw the price decline. And that is just the biggest showcase of why shorts are, of course, fucked. You can see here with the average of exchange, 2013 to 2020, average is 40%. And this is what we've said. Dark pool is something we've seen in the market because it happens to every other stock. But normally you're looking at 20, 30, or 40%. You wouldn't be looking at 80, 90%. Now, 2021, when everything started, 58%. And then 68, 71, 73, 75, and right now we are sitting at 75. So you can see how the dark pool is gradually increasing, and it jumped from 40% quickly to 58 to all the way to 75. And the years, when you look at it, obviously it shows why this is happening. And so, like I said, I'm not against the fact that we are seeing dark pool because all these other firms experience this dark pool as well. I do think that probably is the best if we just remove dark pool at all costs. But if we are talking about the existence of dark pool, we should see it at the same percentage as other companies. If Cinemark is facing 40%, if IMAX is facing 40%, so should AMC. And that's the important fact I want to talk about. Another thing is the Federal Reserve keeps interest rates at 3.75%. And now the reason why this is important is because it obviously plays a part to how much interest AMC is paying. But like we've said, with the fact that they've refinanced the notes, with the fact they've pushed it out, we are seeing them already cut cost. But I just think that this is something we still should pay attention to because it ultimately helps out the fundamentals. Another thing is GME beating earnings. And now we've seen how well GME has done, but the attention is of course on the acquisition that GME is trying to do. Now, another thing is these catalysts that are forcing the swaps to unwind at maturity. The toxic swaps plus bullet basket, everyone's been tracking for years. We are seeing now that happening. And this is something we've mentioned in the past before. Now, remember is that one spark and counterparties can't roll anymore. Synthetics exposed, short forced to cover in real shares. These swaps, these toxic baskets, they have existed for a very long time. It's something that I've been paying attention to as well. Now, nothing major has happened to it as of right now. But the fact that is that at any point, it can actually have a massive effect. We can actually see it break out. And when that does break out, that's when we're going to be seeing the squeeze. That's when we're going to be seeing, short sellers again liquidated and margin called. And if you want other evidences of course, manipulation, Citadel fined 22 million, but 16 years after the crime. This is something that is obviously ridiculous. And the fact that there are two parts here. $22 million for a firm that's making tens of billions of dollars clearly is minor. 16 years after the crime, ridiculous. And again, the ETF baskets that we were talking about as well, just to mention it. And then also Citadel, Jane Street, Virtue, they were involved in MMAT as well. You can see how they're all involved. And this is why we talked about the manipulation that's obviously going on within the market. As always, none of this is ever financial advice, so do take what I say on yourself. Make sure to do your own due diligence and research, and I'll catch you guys next time.